What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 8th of 2018. Well, folks, it's time for a daily update here on the DataDash channel, and today we have a wide range of topics to discuss here on the update. First and foremost, as always, we'll be taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of this as well, we have a lot of key headlines to talk about. The first that we have to discuss has to do with what we talked about yesterday, the VanEck Bitcoin ETF that might be approved by the SEC over the coming weeks or months. Some more emerging details on that, as well as an interview with the CEO of VanEck. So I want to share that with you guys throughout the video. Along with that as well, Jamie Dimon and Warren Buffett crawling out from under their rock again to talk about Bitcoin. So we'll be hearing about what they said in the recent CNBC interview that they did. Along with that as well, Russia's President Vladimir Putin responded to some recent questions in regards to cryptocurrencies. So we'll be discussing about what he said in regards to cryptocurrencies. And last but not least, seeing as we've been doing a little bit of coverage on traditional markets and a lot of the economic dominoes that might topple the global economy over the next coming months or years, we want to spend some time to talk about Argentina. This is something we haven't discussed much on the channel. We've been talking a lot about Italy, the crisis in regards to Italy, as well as what we're seeing in a lot of other European banks like Deutsche Bank. But I want to spend some time to talk about Argentina as well. So without further ado, let's go ahead and dive into the video, guys, and take a look first at markets. So first thing I want to talk about here is generally the stance of the markets right now. We have a few players in the green, but for the most part, the market is in a sea of red for the day. Nothing too dramatic, nothing in the double digits in regards to the top 100. However, again, this is just simply price action following Bitcoin. Bitcoin's down about 1.5% today so far, and we'll have to see where the direction goes once we take a little bit of TA look at it later on. I think, again, this isn't anything to fret over. It's just generally, again, a little bit of a correction following, a little short-term correction following the uptick in price action we've seen over the past few weeks. Going on here to take a look here at market capitalization, we can see for the year, we're still holding in that wedged range of price valuation. We can see over the past 7 days, no consistent trend. We've seen an uptick in Bitcoin and since then have stagnated around the 21-day moving average, which we'll be taking a look at later on throughout the video here in just a moment. However, taking a look at market dominance, let's go ahead and get Bitcoin on the 1 year here. Let's get the market dominance here on the 1 year, excuse me. And we can see that, again, Bitcoin dominance has been gaining over the past few days as we've struggled against the 21-day moving average. Again, I don't think you're going to see it go above 40%. That would be the danger zone for me, that Bitcoin might see 5K or lower. But in this case, I don't see it happening. There's too much developments going on with what's going on in Coinbase and in regards to the potential Bitcoin ETF. So if we get more speculation, more developments going on there, I think you're going to see other coins gain dominance, just as we've seen with both Ethereum, Ripple, Bitcoin Cash, and a few other market leaders. Alrighty, so let's go ahead here, take a look at Bitcoin because many people are very curious. This looks like it might be the second rejection at the 21-day moving average. Are we going to come down and retest this price range down here, as we were generally talking about potentially happening, where we might have a second retest down here? You know, for example, I will say that right now, it's definitely not looking to be the price action that I was hoping for. I was hoping that we would get a pop-up and a close, as well. We got a pop-up in price action if we really go down here towards 7,750, and if we got a close above there, I think we could have gotten the volume and continued to head upwards towards the 50-day, which would give us a lot of range to move. And I think that's going to be the next leg up in regards to price movement. But at the moment, we're still seeing rejection at the 21-day moving average. We can obviously see it's playing a role here. We're not seeing any serious levels of volume come in just yet, still in this general price, this general volume range that we've been seeing for the past month. It's been a depleting amount of volume. Doesn't matter what exchange you look on, it's this exact same trend. So we need to see more volume coming in. We need a catalyst that's going to drive it. If we can get above the 21-day, I think that can start to show some momentum in the market. But again, you're seeing so many BART charts. You're seeing if we take a look at the hourly, I think you'll get what I'm referring to if you don't know the meme by now. But just these dramatic increases on the short term, up to the upside and then also to the downside. But we're toying around with the 200-hour, which I will say I do like is starting to curve back upwards. That's always a positive sign for the upside. And along with that as well, the fact that we had the bounce off the wedge here back a few days ago is definitely nice. But really, for the past week, we haven't seen a consistent trend in Bitcoin. So we just have to remain patient, wait to see if this can get above the 21-day moving average, get a solid close with some solid buy-side volume. If that's the case, I think you're going to continue not only past the 50-day, but you're going to get up towards the top part of the wedge. And we'll see if this is another rejection point or if this is going to be the breakout point. We might need to get tighter in the wedge before that happens. It is going to depend on the catalyst that we're looking for. It's going to push the market either very far up to the upside, which I think is going to be the ETF ETF, or if we're going to get some more downside action until we have that catalyst. So we've got a decent time frame. We'll see what happens. Going on here, Ethereum, Bitcoin. Ethereum, which was looking like it might be flagging here, with Bitcoin still getting stagnant at the 21-day. We're seeing the exact same with Ethereum here, and it's in a tight situation. If it can't hold too well with the 50-day coming up here and it breaks below not only the 21-day, which is getting what it's currently getting rejected at, but if it breaks through the 50-day moving average, this could come all the way back down to retest this position down at 7,200,000 Satoshis, where, ironically enough, the 200-day moving average is coming to line up perfectly. So we might see that in regards to price. And again, at worst case scenario, we might see it come down all the way to 7 million Satoshis. Who knows? Again, I would think it would only happen if Bitcoin comes back down to the relative lows that we've seen recently around the $7,000 range. Going on from here, though, just not generally touching Ethereum at the moment because it looks like it could correct. I'd definitely like to pick some up if it does correct down to those similar levels we saw and makes contact with the 200-day. Going on, though, let's take a look here at XRP BTC. Ripple right now holding strong on the 50-day. Gotta say, as much as I don't really like trading the Ripple coin and stuff, I will say it is nice to see that this is holding nicely on the 50-day. And again, we know, guys, this can be a momentum play. We do not want to doubt that this can obviously provide some good trading opportunities from time to time. So even though we're not seeing the volume right now, if this holds here on the 50-day and we can see it, if worse comes to shove, it breaks through and it holds support on the 200-day moving average, so long as it holds on these moving averages coming up and the trend starts to reverse as it has, this could be a serious opportunity for a trade here. So we're going to keep an eye on it. Not setting any key levels yet. I have to go through and redo some TA on it. But at the moment, I'm keeping an eye to see if it's going to hold on the 50-day. If it holds on the 50-day out of all three moving averages, I'm going to feel very, very confident on this, especially if the market starts to correct. Let's go on here and take a look at a few more. Bitcoin Cash. Bitcoin Cash down below the 50-day moving average again. You're going to look to see if it can hold on some of these other moving averages down here. It's very inconsistent right now. But at the moment, I just generally don't like this type of price action. If it can hold and get above the 50-day, I might like that. But haven't been wanting to toy with Bitcoin Cash. There's not too much reasons or catalysts for me to do it at the moment. Going on here, let's take a look at EOS BTC, fifth largest player in the market. We can see EOS has started to not only hold at 180,000 Satoshis, but along with that as well, is starting to look like it might curve up and continue the breakout back to the highs. I think you're only going to get that if Bitcoin and other players continue to the upside. But again, we're toying around with the 21-day moving average. We need a close above that in regards to Bitcoin. And with that, I think you'll get the continued momentum here in regards to the mid part of June for EOS, possibly back up to the original Bitcoin comparative highs back here in late April. Going on here, let's take a look at a few more market leaders. ADA BTC. Again, guys, we've been talking about Cardano. I like a lot of these protocols. I like Cardano, but I think this has come back down to not only 2,400 Satoshis, but also might have an opportunity. Again, if we get a serious correction, if this double bottoms and breaks through, we could get this back down to the 2,000 Satoshi range. Going on to take a look at a few more market leaders. Icon coming down here, down to not only the lows down here, but again, might play the same role as Cardano down to 2,500. Again, that's the bearish case, guys. I think you're going to see it come back up here, and it's more likely with Cardano as well to come back down and double bottom at those similar levels we saw, as we'll probably see Bitcoin come back down to its lows. That would be the case. So again, we're just not seeing any of these players have any momentum. They're not above the 21-day, which is, for many people are asking me why I use the 21-day. It's usually used as a momentum indicator. If you can get above the 21-day and you're holding above the 21-day, it's a very effective tool. I'll even go ahead here just to show with you guys as a little bit of education here. Usually when you break the 21-day, you can see that Bitcoin's trend starts to become a little bit jumpy and usually has a correction, especially during these periods last year. You can see it was holding on the 21-day quite consistently. And if you can hold amongst the 21-day, that is very, very good to signal momentum in the market, to signal bullishness, to signal volume and price strength confirmation. Going on here to take a look at a few more players. Let's take a look at Nulls BTC. Nulls right now, again, still looking like it needs to come down to 45,000 sats, but I'm still big on this one. If we can get a little bit of price strength confirmation at that support level, as well as support on the 50-day moving average with some extra volume, still sounding good on that. Another one as well, I just have it here. We'll run through some of these on the watch list. POA coming down towards my entry point. I might make an addition here. Haven't done it yet, but it is definitely in the range where I can make an addition on this because this is obviously one of our top 3 coins for the month. It's one of the cheaper protocols at the moment. And along with that as well, I've got my tight stop loss just in case if things don't work and if we get a dramatic sell-off. So I'll be secure in that sense. Along with that as well, Court Chain. I want to spend some time to talk about this because many people had heard about the hype about this. And we even talked about it on the channel, how this was going to be overhyped and how I warned about a dump happening on this. Because, again, guys, you have to understand there was a lot of, I would say, a lot of hype and build up against this project. And not saying the fundamentals aren't good for Court Chain. That's a whole nother discussion. But the token metrics and how this was hyped up in the whole pre-sale phase, and there's just a whole collusive network, guys. I hope to cover it in the ICO video in the future, but long story short, this was getting propped up quite heavily in the ICO space and has multiplied over and over from the original investment. So a lot of people are obviously going to be dumping it. Okay, so again, just be careful on this. Even though it's on Binance, even though it's on KuCoin, be careful. This could go down a little bit further, but I would say wait for a base to form if you're going to try to trade or speculate or invest in this. Again, you might like the project, but I want you guys to get a fair price for this. So just definitely be careful. Going on with NANO as well. NANO has still not really picked up a confirmed trend. We were up to about 5,400 Satoshis the other day. Definitely good so far from the entry point. I'm not down on my trade. I'm still up on this so far, my trade / investment on NANO, but we're still holding well above the 5,000 Satoshi level. This continues to rebound off this level, which is signaling some serious price strength confirmation ever since back here in late May. So I'm thinking this is really starting to form a base here, and I'm liking every single time this starts to continue to touch down to this level, find support, get buyers down at these levels. The volume candles come in. It shows me that buyers are showing price strength confirmation on NANO here. So with the kind of correction we've seen in this market and the base that we're forming here, I think we could start to see some exciting stuff here. Going on as well, there was one that people were asking me to cover. They wanted me to cover Neblio as well. Neblio, guys, as much as I like this protocol, did not come through the cup and handle. We just had an extended bear market, and because of that, Neblio has broken down below a key level at 10,000 Satoshis. So in this case, guys, I'm going to be patient on this one. I'm not going to make any serious moves, and I'm going to be, again, patient in regards to attacking this one. So just got to be slow with it. We'll see if we can get maybe a correction down to a more reasonable level. But the sad thing is that we really don't have any potential support level until 7,000 sats. We're down here around 5,000. Again, I'm going to be careful. There's a lot of saturation with the protocols in this market. I'm going to wait till I get a proper discount on this one. Along with that as well, Wanchain looking like it wants to roll over and come back down to this price range. We've been talking about this for a while. Again, Wanchain, another example, just like I was talking about with Court Chain, but this one got propped up. All right, so anyways, that's enough TA for the day, guys. Let's go ahead and talk a little bit about the VanEck CEO coming out and talking about being confident now more than ever that their ETF proposal to the SEC will get approved. So as we all know, we've been talking about this for a while, the ETF concept, and we talked about how they had removed about a dozen proposals from different companies in the financial product space, especially companies that specify in building ETFs. And when they had pulled these back in 2017, these within this pile of different ETF proposals, VanEck had, I think, 1 or 2 proposals in regards to a Bitcoin ETF. And they feel now more than ever that this ETF proposal is going to meet it. So we already talked about a lot of the details yesterday. Again, if you guys want to see some of those, I recommend you go look at my video from yesterday, my daily update. Basically, we talked generally about how this is going to be more predominantly built for the institutions first. It is going to be an expensive ETF. It's going to be holding, I think, was it 20, 25 Bitcoin per ETF? I can't remember the specific number, but it was in the double digits where it would be quite expensive for an average retail investor to try it. And it's also going to have physical Bitcoin backing it, which is nice. But it's going to be an institutional entry for a lot of investment banks and everything. And what they're trying to do is generally what GLD did for gold as an ETF. So I think this is very interesting to see that they might be able to get this out. The things I wanted to share with you all, however, was the fact there's a little bit of details in the article where they talk about some confident factors, and this basically stems off of a CNBC interview that came out with the VanEck CEO. So I'll leave this link down below if you guys want to watch this. It's a good 5-6 minute video where you guys can watch and learn a little bit about why they're confident on this being a successful ETF in the long term and how it could be a first entry point for a Bitcoin ETF. And if we get this, guys, this is going to be the catalyst. It doesn't matter, as much as we want to see a retail ETF, I think we're going to get that soon after. But the thing about it is that if you get any form of ETF that's going to allow investment banks to invest in Bitcoin, that is going to be a major step for liquidity coming into this market, where people who are interested in trading currency markets, again, will be able to easily bring the liquidity over and trade Bitcoin ETFs. So it's very, very interesting to see that this might be coming sooner than many people have predicted. Again, I've been talking about it eagerly on this channel, and I wish we could get a predominantly retail ETF first, because I'd like it to be quite distributed. Again, that's what cryptocurrencies are all about. When you're dealing with financial markets and regulation, you can take the good and the bad with the SEC, which is really kind of setting this narrative that they want something that's going to be safe for retail investors, but along with that as well, they feel probably would be best toyed around with the institutions. I have some mixed feelings on it. Again, there's some good influences in the SEC, and there's some bad influences that really want to help cronies in the financial sector. But as well, at the same time, there are some decent measures in place to protect investors, okay? So I know people have stingy opinions on it. I was reading the comments from the last video. But I'm glad you guys stand hard by your beliefs and stuff, because there is good and bad with all of this. And it's not always going to work in our favor. But I think in this case, at least it's good to see an ETF. I think it's going to be good for liquidity. It's going to open up the floodgates for retail adoption in the future. And along with that as well, could open up a much larger legal framework and a legal regulatory understanding of where cryptocurrencies stand in all of this in regards to the financial sector. So really excited. Recommend you watch this interview, guys. Going on to talk about more of the financial watchdogs. Just be aware, Jamie Dimon says. So I want to talk about this again. CNBC, I got to say, I got to give credit to CNBC for this. I don't mean to go on a tangent here. I'm not too big on mainstream media, but I got to say, CNBC has done a very good job covering a lot of this whole crypto space as of recent. They've been doing a lot of important interviews. Again, it's hard to really get a grasp on all this because it's all so new, but they recently went out and doing another interview. They know we love it, guys. They know we eat it up. Jamie Dimon and Warren Buffett did a joint interview on CNBC just the other day. You guys can go ahead and obviously, I'm assuming, click the link here and go ahead and watch it. As I was pointing out about the VanEck ETF, they have a lot of great video content. But the big thing that Jamie Dimon put out in regards to a question about Bitcoin and cryptocurrencies, he stated, and I quote, I don't want to be a Bitcoin spokesman, just be aware. So what could Jamie mean by this? Are the bankers planning some kind of collusive plot against Bitcoin? No, I don't think that's the case. Again, this goes to show, guys, and this is something that I really want to put out as important. I don't know if, JP Morgan and Chase, or Jamie Dimon or any collusion of bankers have any secret plans to get rid of Bitcoin. I don't think there's really anything you can do outside of misleading people on what Bitcoin is, which is pretty much what Jamie's been doing for the past few months. But again, he's a banker. All due respect to the sense that I guess he's got to protect his business. But the fact of the matter is that there's always different collusive sides in this whole world of finance. Again, people always think that there's some isolated group that controls everything. And as someone who's more of a conspirator myself, the big thing to keep in mind, guys, is that there's different influences. There's people who are from the traditional financial sector who love the idea of cryptocurrencies, who want to get involved in it. And there's a lot who don't as well. And I think Jamie fits into that category. Same goes with Warren Buffett. There's a big reason, for example, and I can't believe out of all places, the place that stated this was, I think, on Silicon Valley, the TV show, where they had Guilfoyle, one of the characters, talking about, Warren Buffett having to protect $80-something billion in conventional money. His assets are stuck in traditional currency markets and everything. And to convert that to crypto or have to deal with the uprising of crypto or the excitement that might be stripped from asset markets, which is what he's heavily invested into cryptocurrency markets, a new emerging currency market. I think that can be very dangerous to not only banks like JP Morgan and Chase, where we're removing a third party in the process for a lot of people with the use of peer-to-peer digital currencies, but also could be very, very threatening for Warren Buffett. And the thing is as well, there's a big standard as to why Warren's not investing in this. And the reason is that he's seeing Bitcoin as an asset. Now, there is some truth to this. There is some truth to the fact that Bitcoin can be seen as an investment vehicle. And right now, by many other regulatory institutions, is being seen as an investment vehicle. To be fair, guys, a lot of people come to this channel because they see, oh, I can invest in Bitcoin and double my money. To be fair, that's really what a lot of people's narratives are. But The reason why he goes so hostile towards calling it rat poison and all these things is because he has an asset-based mindset. And Bitcoin itself, even though we might see it as an investment, it's because it's an emerging market. Outside of it, we do hope in the future, I at least hope myself, that this is going to be used as currency. But there is an investment opportunity there because it is such an early market. It is so early on where, as this currency market is sitting at $300 billion, if this goes to a multi-trillion dollar market, obviously there's going to be some growth. There's a lot of room for growth in that sense. So, I think, again, the hostile arguments come from a lot of different reasons, but I think as well it comes from a lot of different fears under the table that they don't show. But they're showing through their words and their reactions. So, again, I wouldn't take this with any serious threat. Someone was asking me and stuff like, what do you think Jamie means by just being aware? Instead, it's like he's been saying stuff about Bitcoin. He's been calling it a fraud and stuff. And again, he even said it could go to $100,000, guys. I don't see it in the same light as Jamie does, in the sense that, it's some fraud or some, Ponzi scheme of some sort. I believe in cryptocurrencies, and this is going to be an emerging currency market that can't be disrupted or shut down. That's the power of it. But the fact of the matter is that view of it being a digital asset or digital commodity is going to be around for about 2 to 3 years until Bitcoin becomes formulated and well known and well owned by a lot of people. Then we can really start to see currency markets flourish out of this this whole concept of cryptocurrencies. So it's a stepping stone. It takes time to build these kind of markets, guys. Going on here to talk about, again, more people's opinions on crypto. Vladimir Putin, out of all people, has publicly addressed crypto concerns. An individual had asked some questions. Here's the quote down here. Will Russia have its own cryptocurrency? Will it be controlled by the government? Do you think in the near future cryptocurrency will completely replace our regular standard money? And I gotta say, as much as there's some good and bad with how Putin responded, I gotta say it's probably one of the most professional government responses we've ever gotten from any kind of politician or leader in the world about cryptocurrencies, in the sense of world leaders, like presidents or prime ministers. And I really liked how he addressed this. If we go down here, he addressed a few things. The relationship of the central bank of the Russian Federation to cryptocurrency is that it considers cryptocurrency neither as a means of payment nor a store of value. Cryptocurrency is not backed by anything. One should treat it cautiously and carefully. So that's the bad statement, but I like what he says up here. I accidentally jumped the quote here by accident. Again, everything's all in one take, guys, so I apologize if I make a mistake. This is the one thing I really liked about it. I don't like the negativity that comes to that comment, and I'll rebuttal to that in a second, but I like this quote. Will Russia have its own cryptocurrency? And he responded by basically saying that by definition, you cannot own a central bank cannot own a cryptocurrency. By definition, they are decentralized if you truly want to have a cryptocurrency. In that case, if it's centrally owned, it's a widespread distributed database in a sense, where there is centralized control. It is not decentralized. It is not trustless if there is a centralized entity. And again, we've been hearing about this topic. We've talked about it on the channel for a while of CBCCs, central bank cryptocurrencies. That's been a proposal since 2015 by the Bank of International Settlements. And to be fair, I think you're going to see them in the future, but people, I think, will realize eventually when they make the same mistakes they do with traditional currencies because they're centrally controlled, and we've learned central banks cannot manage monetary policy, that by definition it is going to fail. And along with that as well, he talked about the fact that they are not doing so much regulation about mining, but they are treating the practice carefully. I'm assuming that's for energy consumption, making sure that individuals are paying taxes in a sense under the Russian government. We'll have to see what he means by that later on. But going towards the comments down here, again, this is just generally the same response we see from all central banks and from all general governments, that their central banks do not see a sense of value. We've been hearing recently from the Federal Reserve that they saw I think it was I can't remember the word they used, but it was a general understanding of valuation that Bitcoin was only valued at like $1,000, like 1,600 or something. I can't remember the exact figure. But the fact of the matter is that you're always going to have a negative response generally from the central bankers. And the reason is because with cryptocurrencies, obviously we understand that there is a risk that they could lose all central control over their fiat currencies that they produce. And in the case of the Russian, the central bank of the Russian Federation running the ruble's already been in a crisis as a currency. It's been devalued quite heavily comparative to other world currencies. And the same goes for a lot of different currencies, as we'll take a look here in just a second with Argentina. So there's something to protect. There's something to be negative on. But I will say at least that I appreciate that Putin, again, hate him or love him, he does address some points quite well in regards to crypto and understanding that, look, we're not going to be trying to fool anyone by creating a digital cryptocurrency because, it's not going to be centralized. If we create one, it has to be decentralized to be truly a cryptocurrency. So very nice to see that in that sense. Give props to him for that. All right, so next up, I want to talk a little bit about Argentina. So we've been talking about about Italy. We've been talking about Deutsche Bank. We've been talking about a lot of the different dominoes in the economic system here in the United States and all across the world. The asset bubble, the ridiculous prices in homes and stocks, and some of the underlying issues we're starting to see as rates begin to rise and QE starts to dry up. So going on here, I want to spend some time to talk about Argentina, and there's some recent news that came out over the past few hours. We can obviously see right now, we're taking a look at the comparison just over really the past few years from 2013 to here in 2018 of the Argentine peso compared to the dollar. Basically meaning that the Argentine peso has pretty much gone from being able for each Argentine peso, it used to purchase 20 cents out of the US dollar, now only purchasing 3 cents out of the US dollar. So this is showing that the currency, the Argentine peso, has lost a lot of value over the past few years. This has been due to higher levels of inflation, extremely high interest rates as a reason. To actually curb that inflation, there's been a lot of economic instability in Argentina. And recently, as we've been talking about in the past, about the importance, and again, I recommend you guys research into this, learn about the IMF, learn about the World Bank, learn about the banking cartel of the world that really looks to be providing the solutions for these countries, but ends up screwing them over in the long term when they're already in a bad enough position. And in this case, Argentina has recently clinched onto a $50 billion loan from the IMF. This is the largest IMF loan in history. Period. This is the largest one we've ever seen before. This even outweighs the original loan they got back in the early 2000s. And because of this, there's a lot of important weight to this. And it shows that Argentina could be many of the other economic dominoes that we see causing or stirring up an economic crisis over the next few months or years if they cannot fix their finances. But the fact of the matter is, as we all know, if you've learned about banking, you learn about debt, this debt isn't free, and along with that as well, it comes with interest. So there is going to be no way that they really curb this crisis. It's just going to get bigger and bigger. It's a bubble, essentially. And I recommend you go through the details here. You can read through it. There's also a great Zero Hedge article, which I'll leave linked down below. Many people, again, have been quoting this as one of the many of the countries in the emerging market sector where you have a lot of emerging markets. Again, these are countries that are developing, usually developing countries going towards being a developed nation. And with these markets, there's usually expectations for a lot of return, but with great return usually comes great risk. And Argentina is definitely not an exception in this sense. They've been heavily raising interest rates, one of the few countries you've seen high interest rates for, trying to curve back inflation. And the way you do this is because if you're setting high interest rates, it's going to keep people from borrowing money. It's going to keep money from entering into the supply. And because of that, you're trying to add value to the underlying currency right now and prevent hyperinflation in your currency. But the fact of the matter is that the currency has lost a lot of its value, and they've had to use ridiculous rate hikes that is really going to set a setback on the economy. And they're trying to get people back in towards, from a risk-taking perspective, more towards a saving, more towards in a sense, cutting down on debts, cutting down on a lot of their bad finances. But the fact of the matter is that this is generally going to be the exact same case over and over again. What's going to happen is they're going to get money from the IMF, and they're going to go through austerity measures, which is a fancy term for pretty much cutting back different government programs, cutting back all these different essential services in some regards, some of them being essential, some are, yes, maybe stupid programs, but in a sense, cutting back on a lot of things that inevitably hurt the economy. And then what happens is they can't make back the payments to the IMF that they originally were never going to be able to pay back, because that's how the IMF makes loans. And in the long run, they're going to step into a larger and larger issue, taking on more and more debt, losing more and more control, and having to allow the IMF to leverage the debt that it has over it for decision making. And again, more austerity measures. So this has been happening in Ukraine. It's been happening in a variety of Eastern Asian countries over the past few decades. I've been talking about this before, guys. There's a great documentary I recommend you look up. If you go on YouTube and look up John Pilger, I think it's how you pronounce his name, John and then Pilger, and look up IMF and World Bank, and you'll be able to find this really good documentary. It's about 50-something minutes. Really opens your eyes to what happened in Eastern Asian markets with the IMF, and you learn just how cruel these international banking cartel, this international banking cartel and all its organizations really can be when they're preaching to help provide economic stability and support to nations like Argentina. So again, recommend you guys look into this case, look at what's going on, learn a little bit about it. and see that countries like Venezuela are not the only one in Latin America that are looking to be on a tipping point, facing hyperinflation and serious issues. This is a global phenomena, and it's happening to the nations where people are already hurting most, which is really sad. But it could be on our doorsteps as well in the United States or in European markets as well. So we have to stay attuned to it. We have to spend some time. If you guys like me talking about traditional markets, let me know down in the comments down below. If you don't want to see it, guys, you can be critical. Still give me a thumbs up if you can. But let me know in the comments what you guys think about this, because I definitely like to spend some time talking about it. Anyways, that's it for the video, everyone. Thank you all so much for watching. Let me know what you think on any of this. We talked about a lot today. I'd like to hear your opinions down below and get a discussion going with the community. That being said, everyone, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.